spend a lot of time on research, stock indexes, commodities. I have a brand new 500K portfolio that I'm working on, and this is the stock index version of this. So this could be our new stock index strategy. I've had many subscribers share some research, so I appreciate your feedback and input on that, trying to work the best of it all into this. And this is what I'm looking at right now, and it's not the final product, but I want to show you the stock index is what we're looking at here. Worked on this weekend, looking at some commodities separately, and then the combination of the stock indexes with the commodities. So 55.91 is the total profit over drawdown. This is currently in a run-up as of yesterday, and so, well, it's not actually, it's in a drawdown as of yesterday. This is a run-up as of Friday. The date is Saturday, but the data is through Friday, and so it worked on this in the weekend. And this setup had a drawdown yesterday, and it includes 24 strategies for E-mini S&P and NASDAQ. You can see that. And let's look at the drawdown curve. Let's look at the results here. And you can see up 17.3 this month with this setup. And adaptive moving average and some of the tick pullback, some of the long-only strategies really hurt us this month. Some redundancies in those as far as the market rallying and getting us long and then rolling over. So not a lot of sharp bear market rallies like we had anticipated. And so here's what the drawdown curve looks like. Very strong. Removing those redundancies, removing some overactive strategies, and just a matter of wanting to phase in on this, waiting for a drawdown for the stock index portfolio of around 200K, trading 4 to 6 micros and 1 micro per 50K in the 1 micro on the 50K portfolio for these setups. So this is with the E-minis, and so 6 micros would be 60% of all this, 4 micros would be 40% of all this, and depending on where we are in the drawdown, we could phase into this. Let's look at the commodities. I want to show you that, and then the combination of stocks and commodities. So without making any changes to my commodity strategies, just taking 17 of the best in each category, not 17 of the best in each category, but just picking some from each category with the 17 of total. Pretty low drawdown, 14K with 17 strategies, and this is just commodity strategies. It does not include any gold. That's the thing. Gold has been the toughest market to trade. I have another portfolio setup that also includes gold, but if you just individually test these gold strategies, not a lot of these strategies are relevant in the current market. So some of the strategies that make the return over drawdown better are not relevant the last several years, and so makes it challenging. Gold is a difficult market to trade, in my opinion, from the way I trade. Maybe it's an easy market for you, but based on my trading psychology and research, it's a difficult market. Silver is easier, copper is easier. Crude oil, few strategies in crude oil really stand out here. And so you see that. Natural gas has been a good market to trade. RBOB and soybeans, removing the soybean swing strategy, so they're all day trade. All day trade soybeans. RBOB is day trade. Natural gas is all day trade. Crude oil is all day trade. Copper has some overnight strategies. Silver, all day trade. And so just with that set of strategies, here's what you're looking at. Fairly consistent, nothing exciting. 88K last year, 25K in 2020, up 22K this year. Small but consistent. Cyclical drawdown curve, a little bit wider than normal right here in 2018, I believe. And so that is what it looks like with 17 top commodities. When I take our 17 top commodities, these 17 top commodity algorithmic trading systems, and combine them with my current 24 top stock index strategies, I'll show you what I get next. So here is what I get. Keep in mind, I am still researching some additional stock index strategies as well, and we'll continue to research commodity strategies. But here is the combination. Takes about 500K. I do need to update the margins. Some of the margins need to be updated. And you get 80.96. Total profit over drawdown, 41 algos. Not changing any of the commodity strategies, just picking the ones that are the most consistent and the most consistent stock index strategies. And as you scroll down, You can see those list of strategies. This is updated through the 27th. This says the 28th up here. It says the 22nd down here. This is kind of a scratch worksheet that I work with. I save it as a scratch so I don't change the original worksheet. And you can see how well it's done. Every year is a winning year. You have some losing months. There's a minus 15K month. There's a minus 17, minus 13K. And so you have some down months. And you can take a look at the equity curve. Nice drawdown curve, cyclical. Not a lot of long drawdowns, time underwater drawdowns until back here in 2010, 2009, and then here. But in recent years, the last 8 years or so, we're seeing short drawdown time period drawdowns, narrow drawdowns as far as the depth of drawdown. So the ideal place to get in on this is around a 10 to 12K drawdown per E-mini. And the thing is, not a lot of these. Like I wouldn't want to trade copper micros yet. You could trade, micro silver. I haven't even looked at micros on the silver. And so natural gas or RBOB. So this is more of an E-mini. This is more of a 500K portfolio, and it's the latest on what I'm working on. $32,000 drawdown. This is 75.20 current drawdown as of yesterday's trade, and so I will continue to research this and have something soon on a 500K as well as a stock index portfolio. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.